What's going on, everyone? Today is August 2nd, 2023, and in today's video, I'm going to be going over 4 of the setups that I saw for today, and let's get into the video. So right now, it's about market open, and we can clearly see that we've had a new high to start the overnight session, and every significant swing high has been lower than the previous one to it. We're now trading below the EMA, and we're expecting to potentially reach the new low of the day. There might even be some sort of wider downtrend at play, but because we have no confirmation of the bottom side yet, we're not going to be focused on that. But at this point, what does look valid is that we have a nice, concise looking downtrend. We're looking to go short for the reasons already mentioned. So if we have a two-legged pullback at the EMA or testing the EMA, we're going to look to go short. So we clearly are making lower lows, lower highs. We want to see some sort of pullback that will give us a reason to go short. We have our first pullback here, but we're above the EMA. We don't want to be thinking to go long for any reason. And then we do end up having what looks like one leg up, two legs up, and we continue to work lower, making a lower high here. We get another attempt at a lower high. So this is technically a failed second entry long. However, we're a doji bar. It looks kind of sideways. It's very close to these lows. It's in the middle of many bars, but my main rule is that I stay away from dojis. So if you took that, you would have ended up getting stopped out. So we have some more bar stacked, and really it just looks like we're going sideways at the moment. But if we zoom out, we still have a very overwhelming downward bias. Like we already previously stated, we're trying to reach a new low of the day, and let's see if we can get a two-legged pullback. So the reason that I like this trade right here as a lower high and also a two-legged pullback is because we're clearly working down. Even though we are sort of congested at this specific level, we've had one bar, we've had two bars, we've had 3 touches, 4 touches. This is a 5th test at this key level. It's a nice bear signal bar. It's a lower high closing below the EMA after we attempted to push above the EMA. If this trend channel is valid, I had it drawn because I already analyzed the price action during the real market session. But if we have something drawn early, it is also a third confirmation if this trend channel does come into play at some point. So for those reasons, it did work out for a nice scalp, and we did end up pushing lower and lower and lower. So now we reach a point where, okay, we're gonna expect to at least have some hesitation at some point, and that comes at this moment where we have many bear or bullish bars pushing above the EMA, and we reach a point of previous hesitation, previous support, previous resistance, whatever you want to call it. So we want to be wary of going long or short at the moment. But if we have another situation to what we had previously, a nice lower high bearish signal bar, I'm going to take that all day. Once again, this downward trend line is coming into play. The reason I didn't mark this entry is because at this point, the bars look very stacked. It's a first entry long, second entry long failure. However, because the bars are stacked, it almost looks like a mini range in itself. But the fact that we pushed below the EMA once again, had a lower high that closed on its low, still with room to the low of the day, on top of the fact that compared to the previous bar, look at the EMA. The EMA is perfectly sideways. It's in the middle of the bar. So by waiting for this other lower high where we pushed clearly below the EMA, came back, tested it, the EMA is now pointing downwards. Nice, excellent tier 1 signal bar. I took that in real time, and prices went and took you for a nice ride. So if you had a runner, that trade would have given you about 10 or so points, and it would have been a nice little chunk of change. So we do, once again, the market does not just move straight down. It does not move straight up. So we are getting to a point now where we are having some buyers, some profit takers. So what we've been seeing in these markets is periods of downward movement or upward movement followed by sideways movement. Another period of downward movement followed by some sideways, and it's expected. It's just how these markets move. And over time, you'll learn to recognize that there's time to sell, there's times to buy, and then there's times to just be patient and wait for the setup to appear. So in real time, on the left side over here, this is about 7:50 Pacific. Until we get to these bars, it's about an hour of just sitting on your hands waiting for a nice entry. You might be an aggressive trader and actually take this short opportunity. It's a visual one leg up, two legs up, nice bearish bar with a lot of room to the EMA. You could take that if you're an aggressive trader, and it would have worked out very, very nicely. You could have waited for lower high, but once again, these bars are very stacked. But in these ranges, on top of the fact that we are just looking to go short, there's no reason to even think to buy. We're expecting to go to the bottom of the range again. And what happens? We get to the bottom of the range. We don't want to just pick a bottom. We don't want to look to go long until we're clearly working above the EMA. And I did mark this area because I want to talk about this setup right here. So if we're playing the range rules, we broke below the range. We look to fade the breakout. We look to fade the breakout because most breakouts of ranges do fail. So we're at the bottom of the range. We're expecting to go to the top of the range. However, if we look at the overall context, all we've been doing is working down, making lower highs, lower lows. There's no real reason to even force the hand at going long. So if you did take this higher low, I can see why you would have taken it, but you can't just let a couple criteria be good enough to override the overall context of the market. And the overall context is that we've been trending down. It's a downward day. You should only look to sell. So if you took this higher low, you would have barely scalped maybe a point if you entered in with a limit order. It could have worked out depending on where you exactly entered, but I would not take this trade simply because the market context is not in your favor. So right now we are pushing above the EMA. There's still definitely the potential to go back to the top of the range. We're still expecting to go to the top of the range, but in the long run, it's just better to only look for shorts in such significant down days. And this is really the trade that you want to take. It's reaching the top of the range on top of the fact where we have a double top. There's even a range within a range here. It's a failed breakout. There's so many reasons to take this short, and it was a great trade. We ended up going to the bottom of the range. We had some more sideways movement, but after that trade, for the next hour and a half, it was really just sideways movement. And if you had taken, for example, if you had taken this higher low right here, it would have been the same situation as you were previous. It's just no real reason for you to go long in such a down day, on top of the fact where these bars are just so stacked. It just looks sideways to me. And if you did take that trade, you would have just got trapped. And to end the day, there really was nothing too significant. But the main thing to keep in mind on these bearish days, on these momentum days, is just to go with the flow of the market. Don't try to counter trend trade. Go with the trend, go with the flow. See you guys in the next one. Thanks for tuning in. Peace out.